Moving along now, it's time to turn our attention over to the markets. Earlier this week, Market Journal host Bryce Doeschot sat down with TREDAS Risk Management consultant and commodity broker Doug Simon to get his take on the markets and what producers should keep an eye on. Here's their conversation from Thursday morning.
Let's talk about crop progress. We see the USDA reports coming out weekly. Pace is pretty impressive at the rate farmers getting the crop out.
It's been very dry, and so the crops have dried down very quickly, both on corn and beans. Last couple of years, it's been more staggered because of higher moisture corn and beans, but beans are coming in at 8% moisture now, and corn somewhere between 12 and 15, so it dried down. Should be around 70% completed, I think, by the weekend on soybeans nationally, and probably more toward 50% on the corn. So we're definitely moving ahead very quickly right now.
Let's dive into the corn market. Obviously, I want to mention we do have a USDA report coming out on Friday after you and I are having this conversation. With that report, though, expecting USDA to confirm what we're expecting, record corn production in the U.S. How's that going to impact the corn market moving forward?
Well, we've had the yields last month, or the average trade guess, is just fractionally lower both on the corn and the beans. And those big yields, we've been talking about that for quite a while. I mean, they weren't quite that high last January, but it's come to fruition that we're going to have those bigger crops on both the corn and the beans, and so it's left us in a much lower price parameter. But we put some lows in back in August, in that 385 level on the Dees corn, and the Novi beans are down at 1055, and the funds were massive shorts, similar to what they were back in February. So we've had that short covering. We've actually got more toward neutral on the beans and the corn. They're short maybe 30,000 contracts now on the beans, and only 60,000 contracts on the corn. So they've flipped out of that big short, and that's why we've had that rally, and part because of dry weather, part because of the political environment right now, talking about with the elections, whether we're going to have trade war with China or not. And so that's seemed to move to the back burner, and maybe trying to see if we could enforce that and have China buy more beans. So that's given us a rally in here, which has been good. And it also had been pretty dry in Brazil, and that's all give us a nice rally.
Back on the corn side, saw a number come out on ethanol production up more than 2.5% year over year. Just kind of a reminder, I suppose, how important ethanol is for corn moving forward.
Well, if we raise around 15 billion, there's a little over 5 billion of that goes to ethanol, which is about a third of the corn. We feed around almost not quite 6 billion of for feeding. But yeah, it's a big deal to us now. The export side of it is actually improving this year relative to where it was last year. The expectations this summer, we exceeded those, and so it actually pulled down our incoming stocks into this crop year because of decent exports, and also the cattle feeding side of it. We don't have as many cattle that we're feeding, but the carcass weights are huge, and we've been feeding a lot more corn per animal, and that's been positive as well.
On the soybean side of things, as you referenced, kind of seeing after a sell-off a bit of support here. Where do you see the soybean market moving going forward?
Well, that's a good question. With the rains coming in with South America, it's going to put a little pressure on us. We got up to that 1070 level for a recent high, and we're back toward 1020, so we're about 50 cents off that recent high. But if that rain really materializes, and there's some showing up down there, and the forecast this morning on Thursday are even better rains than what they were yesterday, so that we're going to probably try to put some pressure on soybeans. But the big picture is that the world stocks of beans and the U.S. stocks of beans are going to be big, and that's a heavier balance sheet than what the corn is. And the beans have more pressure on them. It's going to be hard to be able to let those move a lot higher right now.
We opened up this conversation talking about harvest progress. What's your sense when it comes to where corn and soybeans in particular are ending up? A lot of on-farm storage, or people choosing to haul to an end user, or perhaps to the local cooperative?
Well, there's a lot of beans, I think, we're moving off the combine just because the basis levels were pretty decent, and people tend to move beans more before they do on corn, and there was more relative carry in the corn market. I think people were trying to store a little bit more corn. There's some areas they've got the new Norfolk soybean crush plant, and people were talking about putting them in more bags and trying to store more beans in some new areas up there that had typically moved into town. So, but it's been a pretty fast-paced harvest here, and early basis levels were pretty decent on corn and beans, and they've slipped a little bit here, especially because it's been so dry in the eastern corn belt, and water flowing into the Mississippi's low, and the basis levels over there have dropped off because of the fact that the freight rates are a lot higher on the barges, and because there's decent crop in eastern Iowa and Missouri.
Well, of course, we're talking about the near term here, 2024 crop, but you've looked ahead in 2025. Tell me what you found.
Well, you're looking at prices at just over 450. We were close to 460 this last week, and you look at 10, in the 1060s on Novi 25 beans, and that corn to bean ratio is about 2.3. So probably going to favor a little more corn planting next year and maybe a few more corn acres. So if you're looking at 455 these 25 corn, you got to be looking at your break evens and probably taking a swing at that. I mean, last year started on the 2024 crop, in this time frame when people are locking in different inputs on, fertilizers and selling an equal revenue component of what you were spending on those inputs and trying to keep that in balance. I think that's an important thing to look at, but look at, making those incremental sales. Seasonally, we do put in some lows this year. We've had a counter seasonal rally with the recent strength in those funds getting out, but when you look at it historically, you tend to have more strength into March on corn, all the way out into May from a seasonal track record. But this counter seasonal rally we've had has been a good place to price your 24 crop and then also get started on the 25 crop. And you can do that different ways, either using some put options underneath the soybean crop, the corn, probably just go out and get that hedge. Because you think about selling corn here today at 454, if we've got 30 odd cents a carry out to July, you could be somewhere 450 to 480 on those hedges or future, type positions, which is still going to be a pretty good price if we have a couple more million acres of corn next year.